Hi, welcome back to the channel. My name is Dave, and today I want to talk about STOR Capital. This is a REIT, Real Estate Investment Trust, that now yields over 5% at its current price. It's got a lot going on for it. I like this one. So what I've decided to do is I'm going to go out, I'm going to snatch up some shares. Wait, no, that's a dirty word. I can't say that. What I'm going to do, what's a four-letter word for snatch? It's a grab, that's right. I'm going to grab some shares, I'm going to add it to the portfolio, and I'm going to sell the covered call against it. Kind of like I did last week if you watched that video on Realty Income Corp. Because I think that's a good way to play this particular trade in this crazy environment that we're in right now. So I'm going to walk you through that trade, show you that trade, and also talk a little bit about STOR Capital. So if that is what you're looking for, please stick around. Whoop. So last week we took a look at Realty Income. Today it's STOR Capital. But today I want to look at the trade first, and then we'll talk about STOR Capital because it's been a crazy week. With everything going on in the world, I think we need to protect our downside. And that's another reason why I've been doing these types of trades a lot myself, where I'm buying things that I think are of good value, and then I'm selling the covered call to protect my downside. So let's talk through the trade first, and then we'll kind of get into STOR Capital because, wow, what a crazy week when you saw the Dow going up, 800 down, 800 all over the place, and, you know, upheaval around the world. So these are things that are way out of our control. You can analyze all you want, but if you want to continue to trade through everything that's going on here and put money to work, well, I want to protect my downside first. So that's where this trade comes in. So let's take a look at this and see if it makes some sense, if this is where we should be putting some money to work. So if you watched that video last week on Realty Income, this is the exact same covered call calculator that I showed you over there. So again, this is on the weekend, so it's a little bit of a snapshot. So 227 is the date, one contract or 100 shares is what I'm going to have to buy to sell the covered call against. Ticker symbol STOR, expiration date 7/15. 2022, and the way I pick that is that meets my goals and my criteria. So somebody asked about why don't you pick a shorter date. If you go out about 30 days, you're going to be able to maximize your return. You're going to get a better return, but you have a lot more to manage that way versus going out 3 months, 6 months, 9 months, 12 months. If it meets, I would say go out further if it hits your criteria. But if you're willing to manage it more, then you can probably get a little bit of a better return if you start going to those 30-day expirations. So something to keep in mind when you're picking your expiration date. So I think you have to decide how much time can you commit when it comes to selling options like this. Strike price, $30.89. I'm selling a call, and I picked the $32.50 strike, which is 5.2% above its current price. Makes sense? And for that, I'll show you this on another page. I collect a $99.35 premium that I get right now and put in my pocket, and I go have my sushi dinner. My call cost then is 100 shares times that $30.89. So I've got $3,089 in stock that I have to buy. Means I'm going to hold it for 141 days till expiration. That means I get a 3.2% return on my cost. And if I annualize that over the whole year, then I get an 8.3% return on this. Sounds pretty good. Dividend rate for this particular stock is 39 cents. Next dividend is due 3/29 of 2022. Days till next one is 31 days. So I'm actually, there's 4 over the course of the year. This one pays out quarterly, and I'm going to collect 2 of those. So over this time period, I should get $78 in dividends off this 100 shares. So that's the trade. Now, if we break this down to stock above the strike, stock below, or stock price falls or break even, we can see what happens. So let's say the stock price improves over the next several months and goes up above the strike price. Well, this is the most that I can make, right? I can make $161 on the fact that it went up above $32.50. I can make $78 on those dividends and the $99 on the premium. So altogether $338, which is about 11% return over the next 141 days. Now, if I annualize that, I get 28.3% return. So that looks really appealing to me. But the downside is, right, if the stock price falls. So if the stock price falls, let's say to $27.50, what happens? Well, I have a paper loss of $339 that I have to cope with, right? I have to decide, do I double down? Do I buy more shares? Do I, average down? What's my game plan? And this is at $27.50. So we'll look at a chart too of where is $27.50 fall for this particular trade, but I still get the dividend, I still get the premium. So overall, I lost 5%, and if I annualize that, about 13, so 13.5%. And we can also look at this as a break-even trade. So if you think about the break-even point as 29.12, that's about it's $1.77 from its current price. That's the delta. So in that case, I lose on the stock on paper, but I get the dividend, I get the premium, and therefore I make nothing. That's my break-even point, $29.12. So that's the trade. And one other really important point that somebody brought up was taxes. I didn't talk about that in the last one, but if you're doing this in a tax-deferred account when you're talking about REITs, that's great because you get that 5% and you defer the taxes till whenever. You're not going to have to pay any taxes right now. But if you're doing this in a taxable account, well, then that's going to be ordinary income for the most part, right? If we look at the different ways that we're making money, like we held this for less than a year, so that's short-term capital gains. We got dividends and a REIT. Those are typically short-term capital gains, or ordinary income, I should say. And then premium, same thing. So you're going to be paying, you have to decide, does this hit your criteria if you're in a taxable account? Because for me, I'm going to be paying about 44% of this out to Uncle Sam and keeping the rest. So I have to adjust for that. You should adjust for that based on your own personal tax situation as well. So that's the trade. If you have any questions on it, ask down below. But that's what I'm looking at right now. And just to show you infidelity, this is what it might look like. STOR Capital sell to open one call for July 15th, 32.50 strike. You can see the bid and ask there, and this would put about $100 in your pocket right now. So that's the premium that you get to walk away with, just as an example. Now, I did this over an E-Trade, and I took up a couple different positions because I actually own STOR Capital in a retirement account already. Like I said, that's tax deferred, which is really nice. But in my taxable account, this is how I'm doing it. I bought 120 shares. So again, I kind of like to pad a little bit. I like to keep it. If I think it's a good value and value enough to buy and sell a call against, I'm usually willing to buy a few extra shares too and slowly add to those shares over time. So I bought 120 shares and I sold that call against it. And this was just before earnings. So I got a little bit better of a premium, $120 in this case. And I also sold a put that expires out there a ways in March 18th. So if it falls below 30, I'm going to add another 100 shares. So that's how I'm opting to play this particular trade. So let's talk a little bit about STOR Capital. In 2014, they were listed on the New York Stock Exchange. 2017, the big news, Warren Buffett, Berkshire Hathaway, decided to invest $377 million into STOR Capital, which represents 9.8% of total shares outstanding. Now, since then, they've added some more shares, but right now I think it represents about 9% of STOR Capital. So when Warren Buffett comes along, and we should call him Sir Warren Buffett, because he's been a great example to everyone on how to invest and how to conduct yourself and buy and hold for the long term. He's probably not buying, he doesn't care if it's 30 or 35. He's buying with conviction and holding for the long term. He's not selling the covered call like this guy. He's buying and holding for the long term. And his group is going to come along and do a much better analysis than you're going to see in the next 5 minutes. So it's not the reason you should buy STOR Capital, but it should give you a little bit of that warm, fuzzy feeling that Berkshire Hathaway is involved in STOR Capital. Now, if you look at everything that Berkshire Hathaway owns, you can see it right here, and this only represents 0.2%. But it's the only REIT that they own, and they picked STOR Capital, and that should mean something to you as you look at STOR Capital. And we can take a look at the company profile, but we know they are a REIT that focuses on these triple net leases, right? And focused in the United States. They have 2,500 property locations across the United States, substantially all of which are profit centers. We would hope so. That's kind of what their job is. Anyway, they've got $786 million of revenue at the end of last year. Revenue growth year over year for trailing 12 months, 12.73%. So decent growth revenue. And if we take a look at what they actually own and operate here, it's broken down into restaurants, early childhood education centers, health clubs, furniture stores, farm and ranch supply stores. So they're very broadly diversified. You can see that they're covering a lot of different sectors there within the real estate community. And then they've even got a big lump here, all other manufacturing industries, 186 of those as well. So broadly diversified. And here's a nice slide comparing them to some of their other peers. And I think, if you're deciding to put some money to work in the REIT space, this kind of gives you a nice little breakdown. So First one here is our dividend growth is the highest among our net lease peers. You can kind of see the growth year over year, 6.6% versus the one that we talked about last week, which is Realty Income at 3.3%. So nice growth. It also says, and our dividends are among the most protected. So if you look at the AFFO payout ratio, their ability to afford to pay out that dividend, this little yellow squiggly line looks pretty promising compared to the other ones that are hitting up there near that 90-95% ratio. So should give you a little bit of a warm fuzzy there as well. And they're also saying, don't forget, we're the most diversified tenant base compared to these guys. So looks pretty strong overall when you compare it to its peers. And something that's unique about REITs is you're typically going to see a rising share count. So if we look at the balance sheet here and we come down to the bottom, common shares outstanding. If this was Google, you should be in panic mode because they had 193 million shares in 2017, and in 2021 you have 273 million. So that's Google. Like, oh my gosh, look at this share dilution. It's out of hand, right? But it's not. This is a REIT. And the way that REITs operate is they tend to have a rising share count over time. So if you look at that kind of information, make sure you understand that with a REIT, since they pay out such a large portion as dividends and they retain very little as earnings, one of the primary ways for them to actually raise capital is to raise the share count. So something better for us to look at would be something like cash flow per share. So you can kind of see here free cash flow per share. If you go back to December 17th with $1.73, even though they've diluted all those shares, December 2021, $1.71, kind of flat. So even with all those shares outstanding now, they've kind of maintained that free cash flow per share. So the STOR Capital going forward, it looks like it's got some upside. You're going to see some analyst ratings here, but in general, REITs with rising interest rates, that's going to negatively impact them because they're going to have to go back to the bank and they're going to have to get money that's a little bit more expensive, right? Now, as far as inflation goes, they can cope with that. They've got these triple net leases that will protect them a little bit. And as leases expire and they get to renew, they can charge a little bit more. So they can handle inflation pretty well. Now, analyst price targets. These are some recent analyst price targets. They got $36.17, which means it's got a little bit upside from where we're at. But I still like the fact that I'm going to buy this, collect the dividends, sell the covered call, and focus on that return. And then my downside is I'll buy some more shares. I know that's really simple to say, but in general, as this thing starts to fall, it's going to start yielding even better and better. And I feel like it's a pretty good position to buy, and it can continue to sell those covered calls. So that is my plan going forward with STOR Capital. So that's it, snatching up some shares or grabbing some shares. Now, if you have any questions on this at all, please ask down below. Really appreciate you watching. If you would like and subscribe because you like the content, that would be great. We'll see you next time. Have a great night. Take care. Whoop.